Hi, this is Joe Rabil with Rabil Stock Research. So got a lot to cover today. I'm going to go through the 10-year rates. I think there's something really important developing here. We've come to a very critical point, which I'll show you on the charts, and I'll show you why my bias is that the rates look like they want to carry to the upside. So we'll go through that. I'm also going to take a hard look at the S&P. We'll go through those market conditions, and then we're going to look at gold and silver. I'm going to show you the differences in the way they're playing out, but how we can handle them depending on what your strategy is. So I'm going to go through that in detail. I'm going to cover the stock requests that come through, and then I've got a couple ideas at the end. All right, let's go ahead and get going. Okay, so for the discussion on the 10-year Treasury yield, I've got a little bit of a different setup here. I've got the quarterly chart in the bottom left, all right, and then the monthly in the bottom right, and then a weekly in the upper right, and then I've got my weekly here showing this zigzag. I just want to, I'm keeping this up just because look at the way this has sort of wedged in here. Obviously showing that we're getting close. I mean, there should be some resolution here in terms of a directional move coming pretty soon. Now, the reason why I wanted to expand the time frame and look at this from a longer term perspective is look at this. I brought this up a few months ago, and I told you that as we turned into the 2026 calendar year, that we should be ready for a new move. Now, I know a lot of people out there, they're looking at the MACD on the monthly. All right, and you see the MACD is below its signal line. All right, but I don't view this as a bearish signal right now. What's taking place is that we're actually making lower low in the MACD on the monthly chart while price is making a higher low. Okay, so I view this as a reverse divergence signal. Also notice, look at the move to the upside. Boom, here to the upside, and look at the strength of the rally based on the ADX. Remember, when green is above red and above the 25 line, it is basically in control, and that is what's causing this ADX line to be rising here, all right? And now we've gone through this consolidation pattern. Now notice the MACD was really overbought and stretched away from the zero line way back in 2023, and it's been spending the last couple years working this off. It's getting closer and closer to the zero line, and I view that as a situation where we're going to come down. We're reaching this area, and the ADX is now low below both of the DI lines, that we should get a resolution and a directional move. Now, when I look at the higher time frame quarterly, this is what has me thinking that we're turning to the upside. If you look at the way this played out, we have this long trend to the downside, and now we're working our way back to the 18 on the quarterly line. The MACD has worked its way back to the signal line, and then I want to look at this ADX for a second, because look at the way this is played out. This is based on the sellers because red was above, right? This was based on the sellers, and even this little move was based on the sellers, but it was actually showing that the sellers were kind of drying up. And then we get this move based on the green DI. This is based on the buyers, right? This strong move to the upside. We went from a new low to a new high. We broke, in other words, we took out a swing low, and then we reversed very quickly and broke this prior high. So I refer this as a bull alert pattern. And we've got moving averages that are now rising for the first time in, what is this? Goes back to 1980 since these moving averages were rising. So we have a long period of declining rates, and it looks like that is trying to shift here. Now, the one thing that's really key is that notice what's taken place over the last 3 or 4 quarters. You see how quiet this has gotten? They're going sideways and they're not moving. So that is typically a precursor to, and this last one is an NR7 bar for sure, probably even 2 back-to-back NR7 bars, but this last one for sure was an NR7 bar, meaning the narrowest range of the past 7 bars. And that just means we need to prepare for a volatility expansion. This is volatility contraction, so we should be looking for volatility expansion. And it's usually the start of a new directional move. Now, what could happen is it could make a move in the opposite direction first and then turn back up, or, it could try and make a move to the upside and then turn down. But based on what's taken place on this quarterly, I mean, to me, the bias is to the upside. We've had this long downtrend that is reversing, and now we're coming into the rising 18-month with a positive or bullish scenario based on the MACD and the ADX, all right? And the weekly chart, again, with this reverse divergence, not the weekly, but the monthly chart with this reverse divergence, based on the MACD coming back down to the zero line with that pattern, and then the low ADX, where ADX is finally getting back down below both of the DI lines. We have all that set. I mean, really, if we got some kind of a strong directional move to the upside here, I would say if we make it up through the 430 mark, it would be a pretty strong alert if we get through 430. If we can do that, and especially with some strength behind the move, some dynamics behind the move, then we should be prepared, because if we come back up through the 5 mark, I think we should be expecting another leg to the upside. Remember what we do here. This is a measured move, so this low to this high. So we went from the rates being down around, let's call it 1, even though it was lower than 1, up to 5. We would add the difference there 4 points to the move. So we're talking about over 4 points to the upside if we do break up above the 5 mark. Now, the only thing that I would say that could really help the situation and keep that 5 level as the top and resistance is if we do get a directional move to the downside here, meaning we get a pretty strong move to the downside that causes the MACD to cross over its signal line on the quarterly chart. Now, that doesn't necessarily obliterate the whole reversal, but it does cause this. It means it's going to take a lot more time, and it could take the rest of this year working sideways rather than breaking out to the upside. So that's why I think we're at a really critical point. If we got a move to the downside that causes the MACD to cross over its signal line, then I think we're safe, and the rates probably stay. And I don't think we get through 5, probably don't get through 5 this year. All right. But if we hold this area, turn to the upside, and get actually a pinch play signal to the upside, taking out a couple bars to the upside, I would think that we probably need to be prepared for a breakout above the 5 level. All right, so just something to keep in mind as we move forward here. If you're enjoying the content, hit that like button and also subscribe. So I'm on the services page of rabilstockresearch.com. At the top, you can see I've got my advanced trend and momentum courses. There's 3 different courses. You can get a discount if you buy them all as a bundle. They are lifetime access now, all right? And also, the individual package has about 3 to 4 reports that come each week, plus a special video for that package. And I also do a once-a-month webinar that is very popular with the subscribers. So you can take a look there. If you're interested in just getting started, you can go up to the top and hit the book. This will give you information on the book. It gets you started on the approach. Okay, let's start with the market conditions sheet here. And, one thing I want to mention is that the trend and the momentum play the biggest role for me. They're the most important, okay? The volatility, the overbought, oversold, and the sentiment are more like secondary indicators. They give us more of an idea of truly what kind of conditions the market has, all right? But we're going to use the trend and the momentum to really help us derive what signals we're looking for, as opposed to being, trying to predict. We'll let the signals develop on their own, and that should put us in the right place, especially when we're focused in on multiple time frames. All right. So right now the trends are all positive across the board. I'm going to show you all this on chart format in a second. The momentum is positive on the monthly. Weekly and daily are both on the neutral side. Again, I'll cover that as we go into the multiple time frame look. All right. The volatility remains bullish. We've got 2 declining ATR lines with below their moving averages, and that tends to be a good environment for individual stock trading. Okay. Right now we're looking at a short-term overbought, oversold oscillator that's working its way up towards the overbought category, which is 70. So we'll have to keep an eye on that. And then the sentiment is actually has moved up into the 40s now. It went from 40 to 41. I do think that's a pretty important jump, though, just because anytime we work into the 40s, where there's 41% more bulls than bears, we are in more of a danger zone. So I have moved that to the negative camp. All right. So we can work our way up into the low to mid 40s here before it reverses, but we have reached a level that I think the risk has increased. All right. Let's go ahead and look at the individual charts now. Okay, let's start with the average true range for both the daily and the weekly. If you notice, we've got a trending move to the downside in both time frames. All right. Now, what that typically means is that, the volatility has lowered. I mean, it's also possible we're getting ready for a kind of a volatility reversal. We should be on the lookout for that. But for now, what I would say is that we're in an environment where volatility is low, and that usually is good condition for trading, for individual trading of stocks, right? And if you notice what's taken place here recently, the average stock, like if we look at the average stock in the S&P as opposed to just the top 7 names, is actually outperforming. It's starting to show a lot of signs. There's some pretty good price action, especially outside of the technology sector. We're seeing different areas start to contribute, start to make moves. And I think that's what this is really showing here, right? We've got a decent environment for those type of names. Now, if you're focused completely on the top cap stocks and the stocks that look just like the S&P, you're probably not having as easy of a time. But I try and focus on, I'm a bottom-up guy looking at individual stocks, and if there's stocks doing their own thing, moving up on their own merit, based on their own merit, looking at independent movers, that kind of thing, then I think you have a pretty good chance of making money in this type of environment. All right. Now, one of the things I wanted to mention is that the sentiment, because the sentiment has gone up here, I mean, that is an increase in risk. But because we have a positive trend in place, and for the most part, at least we don't have negative momentum, right? We probably should be on the lookout for some type of a pullback that leads to higher prices, as opposed to like a big reversal to the downside. I'm more anticipating something we could get a pullback to the downside, but I think it would probably be more of an opportunity rather than some kind of a big drop. All right. So I did want to mention that. Now, let's go ahead and look at the individual time frames. One of the things I really wanted to focus in on is the monthly chart, because if you notice what took place, we had pretty strong, look at the move that we had to the upside. Look at the size of these bars. These are good, solid green bars to the upside. And for the last 3 months, we've really kind of stalled out. The size of the bodies are really tiny. There's not much upside progress here at all. And in fact, we tried to make a new high here this month, and we're having a hard time having any follow through. So it looks to me like the momentum is slowing. Now, it also could be just a pause in the trend, and all this is setting up for another up move. I mean, I'm willing to be open to that, but I think if that's going to happen, we're probably going to get some kind of a drop first, at least a test of this prior low, before we're really ready to ignite back to the upside. So I think this needs a little bit more time. I also think, we've got a little bit of a distance between here and the 18-month line. So with the slowing of momentum, it just increases the risk that we should do some type of a consolidation pullback, correction, something like that, I would think before too long. But we're not going to really guess. We're not going to predict. What we're going to do is go to our smaller time frames. One of the things I wanted to mention on the weekly chart is that even though the MACD is below its signal line, if you notice, it's making like really tiny, smaller, lower lows, right, during this period. But price is actually making smaller, higher lows, right? It's doing the opposite. And in this way, it looks sort of like reverse divergence. Now, it's not an official signal because we don't have a good pivot to work off of to draw a trend line or anything like that. But I would say that the bias right now on the MACD is more neutral because, we're below the signal line, but it's showing sort of signs that it's to me, it's not trading real heavy based on that. Now, one of the things I think we should be on the lookout for is a re-entry. And I think the re-entry on this time frame, the weekly time frame, is the one I'd be watching for, meaning we get a big, a decent sized red bar, sort of outside reversal of this bar where we get us make a slight new high and then reverse back down and show some strength to the downside. I would think that increases the risk, and I would think that would put a lot of pressure on this 18-week line. If you notice, we're pretty close to it. Okay, so typically I would be looking for this to provide support, but when we're this close to it, it could come down and break through that and maybe come down and test these prior support areas or even maybe go down to bigger support down around 6,000 and test the 18-month line. So if we look at this and we look at where the 18-month is, it's down in the lower sixes. We really could make a little bit of a move if we break down below the 18-week. So we want to keep an eye out for, first of all, do we break the 18-day here? Right? Do we break the 18-day? We have zero momentum on this time frame too. I mean, if we look at this, I want to look at both of these together. Look at how no upside momentum based on the ADX in either time frame has taken place. All right. Now we made really good progress to the upside on the weekly chart, and we've made higher highs and higher lows on the daily chart. It's just the deep pullbacks are telling you that it's not a really solid trend. We don't have a really firm trend in place, and when that is the case, then we need to be ready for the potential for reversal. So if we see that, and I think we want to see that on a weekly closing basis, if we have that, then I think we're at a little bit greater risk for a deeper pullback, a drop. And as I said, based on the sentiment and everything else, I'm more inclined to believe that that's a pullback that would be an opportunity rather than the start of some big major bear market or big decline. All right, so that's how I'd be standing right now. Keep your eyes out for the smaller time frame. If you notice what took place here, we had a pretty strong ADX reading to the upside, right? But then we pulled back and made a new high, and we did not get that confirming signal of ADX to the upside here. So now we're getting this reversal signal based off of the lack of enthusiasm on the buying side, okay? And as a result, we now put more pressure on this 18-day line and this prior support. Okay, I want to start out with the IWM like I always do, just to double check and see what changes are taking place. And I focus in on this upper left chart here because the relative strength line can tell us a lot. And if you notice what's taking place for the first time in quite some time, we're making another higher high, and it looks like this moving average is starting to turn to the upside. It declined here, it flattened out right here, but we haven't had an upward slope to this since early 2023. Okay, so we're in a position now. I'd actually like to see a little bit more follow through here. If we get this to move up a little bit more, I'd feel even more confident. But I can tell you by looking at a lot of individual stocks, we're seeing a significant broadening effect. Right, it's not just focused in on the Mag 7 right now. Those stocks have been correcting, but we're getting a lot of good action in stocks outside of that and outside of technology, which is all I think is all positive when you start to think about your personal idea, finding ideas that you think you can make money in. We've got a lot more choices, right? There should be a lot more out there. Ultimately, my list right now is actually not that big because a lot of the strongest stocks and the stocks that have made really good moves in recent are short-term overbought. But if they pull back, they're going to look really attractive. My list is probably going to explode sometime over the next 2 to 4 weeks if we get that kind of a setup. So we want to look for this to continue to move up on a relative basis versus the S&P. If it does that, I think that's a really good sign. All right, let's take a hard look at this gold move. And what I want to do is I want you to take a look at these bottom two charts. Look at the monthly chart of gold and look at it on a weekly basis. All right, and then I'm going to switch to silver real quick and notice the difference. Do you see the vertical nature of this move in silver? So what we would do is what I like to do, and a lot of people ask me why I don't use log charts. I actually like to use acceleration trend lines. Okay, so let's just start and we'll take a look at the gold chart. All right, and we start with the initial trend line off of this low, from this low, and then we made a higher bottom and turned up. All right, made a new high. You can draw your trend line in. Well, we can then accelerate again because that happened again here, right? And then we accelerate here, and then we accelerate here, and then we have this final acceleration here. Now, so we've gone through 1, 2, 3, 4. This is our fifth acceleration of the trend lines, okay? But it's not, the vertical nature is not there. And in gold, you'll typically see a really violent reversal at the top, meaning volatility should explode. We should get another move up and maybe another move down and another move up. I'm thinking there's more upside to go. But when we look at the silver chart, it's sort of playing out differently. Look at the way, again, look at that vertical nature on the monthly, and then even on the weekly chart, it's just gone crazy to the upside. Now, if I do the same thing and I start drawing in our acceleration trend line, so we start here, we got a trend line here, another one here, another one here, and then we're again, totally vertical to the upside. When it starts to look like this, where we've got this sort of parabolic move taking place, I think we want to be a little bit more, on the look and going bar by bar at this point, meaning just kind of following each bar behind. And I actually would not mind using a average true range stop. So let me just show you what I'm talking about. I actually don't have it shown up here. Well, actually, I'll just pull it up here. If we look at the average true range ATR trailing stop, and I use a 2, I use it going back 2, and I use a 20 period. All right, so it's 20 periods, multiplier is 2, and then if we look at this, we can see that it's following the trend really closely to the upside now that it's started to accelerate. This last week is not up to date. When it updates for the week, it'll probably be up like this. All right, so it gives you this trailing stop. What it does is that it's going to widen when there's bigger volatility, and it'll stay farther away when there's bigger volatility. When the volatility shrinks, it'll move closer, and then it just keeps trailing up to the upside. I think this is a really good way to kind of manage this position at this point. And if we go back and look at the gold based on that, we've got the same sort of thing. It's been trailing a stop to the upside as it started to extend and accelerate. And I think this is a pretty good kind of rule of thumb. Now, you could also do this on the monthly chart. If you really wanted to give this some breathing room, you could do it off of on a monthly basis. So it's a nice little indicator that they have on this using the average true range as a trailing stop method. All right, it's a good rule of thumb, and I kind of like to do this when I'm looking at long-term positions that I'm throwing in my 401k, and I really don't want to manage them closely. I'll use something like this to just kind of manage, and then I do take profits along the way. I've taken a couple profits in gold and a couple profits in silver as they've moved higher, but I'm leaving the position on until I see something that absolutely just looks crazy to the upside. I'm just going to leave the position and let it do its thing. Now, I have to say that what's going on in silver is kind of testing that just based on how vertical the move has been. But I got to tell you, when you look at these, go back and look at historically. I'm a little bit of a nutbag. I go back through these historically, and they can make massive volatility moves before they top out. All right. Let's take a quick look at the energy. Look at what's taking place here. We broke below the lows of this. Of these prior lows, and now we're reversing back to the upside. Look at what the MACD did on the monthly. It was way extended above the zero line, and now it's come down to right at the zero line, and it's turning back above its signal line with a low ADX signal. I mean, this should be the start of something pretty significant for energy. So I would definitely start going through my energy stocks a little bit more closely. I'm starting to highlight more and more in my reports, and I've got one I'm going to bring up at the end of this show. All right, let's go through a few symbol requests. So we got this big this pullback here, but look at this big, huge move that's taken place. To me, this is a stock that I would hold, but I wouldn't be a buyer. And we had the last opportunity to be a buyer was down on this pullback, on this counter trend move to the weekly. So this is the 2 time frame pattern that I look for. It's in my book and in my courses, where I really focus in on the higher time frame is in a bullish trend, lower time frame is counter to that, and we're looking for a reversal back to the upside. Now it's a little overbought. We need to get a pullback to look for something attractive here. Now, if we look at what's taken place with Alphabet, we've made a pretty strong move to the upside. I think, again, that it's pretty extended. Look at how far this is from the 18-month line, okay? So I would be looking for some type of a correction or pullback, at least to the 18-week line, before I would be interested in this one. All right, SCHW. I actually like the look of this. Now, I'm actually looking for this to pull back to the 18-week and hold and turn back to the upside. So I would be looking for a reversal pattern on the daily chart and then maybe a turn back to the upside. Or you could just be looking for like an RSI buy signal here where the RSI 5 drops down below the 50 mark while the RSI 20 stays above. We've already had a few of those, but we might get one more here just based on the way it looks like it wants to pull back. We're starting to see financials kind of take a breather here. Okay, a couple of quick names to be on the lookout for. Now, I brought this up before. I just want to make sure we know we don't buy this until it breaks out above this 15 mark. There's nothing to do. We don't buy. We're in a low ADX condition right now. MACD's cupping around. We need to get strength to the upside before we'd have an interest in this. Now, CVX, I really like what's going on. And if we switch this to a quarterly chart real quick, this is pulling back to the 18 on the quarterly chart, and it's gone through a long consolidation after that. I think this is really setting up for a pretty substantial move with the MACD turning right at the 0 line. And then lastly, I'd be watching this Macy's chart. Look at this longer-term picture, the way it's reversing, and we're starting to get a pullback here. Definitely one to keep a close eye on. Thanks for watching. If you have any stock requests, you can send them to stocktalk@stockcharts.com, or you can just put them in the comment area below. Also, if you want to learn more about some of these techniques with MACD and ADX and multiple time frames, you can go to my YouTube channel. It's Joe Rabil RSR. Have a great week, and we'll see you next time.